Okay, so what are you saying, people, and welcome back to your favorite YouTube channel. So today, guys, we'll be talking about pullbacks. Now, I do have two different types of pullbacks I'll be talking about today. Type 1 and Type 2, both are great strategies and happen all the time in the market. So I'll go into depth about them. First, I'll break it down, show you the structure and how we look to trade them, and I'll show you some examples on Euro USD as well. But this will be a great video for you guys. If you're still struggling with your pullbacks, don't know what you're looking for, this video should clear things up. But before that said, let's get straight into the video. So we'll start with Type 1. So again, this pullback strategy is very common. You see this all the time in the market. And the key thing with this one is always just waiting for precision, waiting for the market to get to your areas of interest and trading off those areas with confirmation. So for example, say we've got a bearish trend in the market, we have a bullish leg, a pullback, and then we have a continuation. So what we want to do now is wait for the next pullback in the market to the upside, look for that next lower high, then trade it and just follow that trend to the downside. So with this strategy, we're going to be focusing on two key areas in the market: the prior lower low, which is this level here, and the prior swing high, which is this resistance here. So for this strategy, we'll be only focusing on these two areas, and simply we'll be just waiting for the market to pull back to one of these two levels, wait for confirmations, candlestick patterns, and then we can enter trades and just follow the trend to the downside. Now this is a very simple strategy, but very important. And the key thing with this one is basically to ignore everything else. The market may pull back to the upside, only get to here, fall to the downside. It may come into this area in between those two levels and fall to the downside. Those trades we're not interested in. I do have something that we can counter that with Type 2, so do stay tuned for that. But in this strategy, we're all going to be focusing on the swing low and the swing high, waiting for the market to retrace to one of those two levels. Again, when you do see my chart analysis, I normally pinpoint one of these two levels, which is what I'm waiting for the market to pull back into. And when I get a nice pullback, I'm waiting for my confirmations. I'm waiting to short the market or buy the market, depends which way I'm trading. And also another confluence that does work very well with this type of trading is make sure that you're in line with the fib and you're trading from around the 50% and beyond. So if I just thicken that up, so for example, if I draw the fib from the prior low to the prior high, to the prior low, I do have a video on Fibonacci. Make sure you go check that out. I'll leave a link in the description to that. But I do like it when the fib is at the 50% and beyond. So when I get my two levels of interest, being the prior swing low and the prior swing high, in and around this area here, it's good confidence to take trades, because majority of my pullbacks that I trade, 80-90% of my pullbacks that I trade, I'm always looking at the 50% and beyond. So 0.5, 0.618, 0.786, even 1, back to the price swing high, of course. Anywhere in there is generally where I'm going to be looking for my entries for a pullback. And this works fantastic when you're having those two levels of your focus. So you ignore everything else, and all you can do is waiting for confirmations, candlestick patterns in one of these two areas, and again shorted it back to the downside, and again targets back at those swing lows, or depending where you want to target. I'll do a video on targets and exits, so make sure you subscribe for that. But that's Type 1, focusing on entries on these areas, and I'll show you some examples on Euro USD. And Type 2 is a little bit more complex, but nothing too crazy, of course. And this is a typical strategy when the market has a very strong move to the downside or to the upside, depending on which way it's trading. And the market is trending very strong with not much pullbacks. And in this case scenario, we might not see the market pull all the way back to our key levels of interest, like in Type 1. So we might not see the market pull back to one of these two areas to get those shorts, and we might end up missing the trade if the market pulls back and then continues. So the way to counter that is to watch how the market pulls back. Normally when we do get pullbacks, we do see a lot of bull flags and bear flags. That's simply when we get one push, a slight retracement, a second push, and then we get the continuation. So when we see this pattern happen, obviously it doesn't test our level. What we're going to be looking for is the market to print a lower high or a higher low. So for example, in this bearish trend here, I'll show you the example in a bullish trend as well. Say we get our bear flag retracement. So one push, retracement, second push, retracement. Now what we want to see is a lower high being formed, and when we see that lower high formed, that there is where we find our entries and we take the trade lower, because now the market is failing to create a higher high, and that's when we expect the bearish trend to kick back in and take the trades. Now there's multiple ways to trade bear flags. Some people wait for the breakout, of the trend line and trade that. I'm not really big on breakouts. If you want to trade that, you can wait for the retest of the trend line. Now it's a bit more up my alley, but I prefer just to wait for that lower high and getting on those trades there, and also maximize your risk to reward as well. And for a bullish example, so if I just flip this in the opposite direction, say we've got a nice impulsive move, retracement, and a big push to the upside, and then we start to get a bull flag retracement. So one push, retracement, second push, retracement. Then we see the market give us a high low, and that's when we expect the market to kick in back bullish, and that is where we look for our entries to go long. So we've got type 1 and type 2. Type 2 a little bit more complex, as you can see. I'll show you some examples to make it a little bit more so you can understand it better. But type 1 works fantastic, and a big tip with type 1 is also make sure that the market is showing some nice impulsive moves. Don't try and hop into trends where the market is very, very corrective and it's very just in a channel. Wait to see some strong moves to the downside, nice pullbacks, strong moves, pullbacks. You want to be trading neat structure, and those, generally speaking, just work a lot better. So I'm going to show you some examples on Euro USD of type 1 and type 2, and just show you how to trade them basically. So we'll jump onto Euro USD on the daily time frame now. Okay guys, so welcome to Euro USD. As you can see, I've got the daily time frame up here. Euro USD has been trending very well over the past few months, as you can see, to the downside. So it's a very good chart to choose from. Not all charts will be trending as well as this, and typically when the market is very choppy, it's best just to stay away rather than try and attempt to trade it. The clean structures, the clean trends are the market conditions that you want to be favoring when you're placing your trades. It's not really worth your time if the market is moving very choppy. So Euro USD on the daily time frame, we'll talk you through some examples on type 1 and type 2 as well. So we'll start with type 1. So that's simple, looking for the market to pull back into our lower low swing low. So for example, back into this area, and then we see our continuations, or pull back into our price swing high up there, and then we see our continuation. So these are the two areas that we're looking to get involved in the market. So let me go through some examples with you guys, and then we'll go into type 2 as well. So as you can see, if I pull back all the way to some of these areas, well, there's actually many examples I could choose from, but as you can see, we've got a simple break and retest of our prior low. You can see the market's had a very strong move to the downside, showing good intent that the market is trending, pull back into that price swing high, and from there is where we look for our entries, and you can see a really nice move to the downside from that as well. Here is an example of a pullback into our price swing high. So you can see I've had a push to the downside, a pullback, another push to the downside, a pullback all the way 100% back into the lower swing high. Again, this is where we look for our short entries, and a push to the downside. And again, these trades are very good as well, because if you think about it in terms of structure, if the market pulls back into this area, it's either going to do one or two things: break through structure and the trend's going to change, or it's going to respect structure and the trend's going to continue. So taking trades from here, you can catch some really nice entries where if the trend and the trade does continue a long way, you can really look to take advantage of some nice trends, especially if you're getting in at the beginning. For example, this trend which just kept on falling for many months. So great entries up there. Again, another pattern that we've got here: break and retest of the swing low, nice move to the downside from that same area, retest it, and then we see the trend continuation. And now for type 2, and also this is another example of our type 1 as well, price swing high, so we get the continuations to the downside, nice pullback, another drop to the downside, pulls back 100% into the price swing, and then we take our trades. Again, doesn't have to be more complicated than that. And then here's an example of type 2 where the market doesn't quite retrace enough to come back into our price support or resistance. So we got a swing low here, The market drops to the downside, pull back from that lower high on that retest of that level, and then we get our continuations. But as you can see, this is quite a considerable drop to the downside. So the market is very, very bearish at this point in time. And we're looking for a pullback to come and retest this area, or even better, coming back and retest that prior lower high there. Then we can get our shorts and ride it to the downside. However, this time we didn't quite make it to that level. So what we're looking for is the market to give us a lower high, and then we can take our sells based on that rather than waiting for price to get back to one of those two levels. So as you can see on the daily time frame, just by reading the daily candlesticks, the market's trending to the upside. You can see high, high, low, high, high, low, high, high, low, another high, equal lows there. And as you can see, we're starting to make some lower highs. The market's failing to push back into the prior high over there, and now the market is throwing some wicks to the upside lower than the previous high, telling us that the bearish trend is potentially about to kick in again, and that's where we want to be looking for our entries to take this trade to the downside. So depending on what time frame or how you want to enter the trade, for me, I'm just using simple candlestick patterns, which I've done a video on. So again, I'll leave a link to that in the description. But all I'm looking for here is to see a sign that the market's failing to create a higher high, aka producing us a lower high. Then we're looking for entries, whatever time frame you want to enter on. 4H gave us a very, very nice bearish engulfing, as you can see. Nice wick to the upside, big bearish engulfing, confirming that lower high from this high over there. Another lower high, and then from there we see the huge move to the downside, and the market continues, and we just keep seeing the trend push down. And this pattern happens not all the time, because sometimes we just see the market trend to the downside like so, give us a big bearish move, and sometimes the market's just so bearish it has a slight retracement, then it just drops, and there's very little way to get into the market. Sometimes the market is just very bearish or very bullish, and it's difficult to find some good retracements. But when we do start to see some good retracements, a good pullback, not quite testing our levels up here, we can still look to trade them. All we need to do is wait for that lower high or that higher low to print in relation to the trend, and look for your confirmations there to get involved in the market. But yeah, guys, that is all. I do have some more strategies to do with pullbacks, which I will be posting at a later date. But this is quite a good introduction to trading pullbacks, and already great methods, great strategies to use, implement. Obviously, go and back test, see if you can get a good understanding of it before you do apply it on any live capital. But yeah, guys, I hope you have found this video useful. If you have any video suggestions, you want to see something on the channel in the future, let me know in the comments down below. If you haven't done already, subscribe to the channel, leave a like on the video, share, comment, hit the like button if I haven't said that already, if you are enjoying the content. But yeah, guys, have a fantastic day, and I'll catch you all in the next one.